Well, hello everybody. We've got the intro going as well as everything else at the same time. I want to say a big thank you to Cern Basher for coming today. We are going to dive into what I believe is the asymmetric bet of the next decade. But Cern, you are extremely active on Twitter, X. You are extremely insightful. You've got very engaging content. Your modeling is second to none. I'd probably be in number two place. And your focus is on science and technology and Tesla and everything else. But can you tell us a little bit about yourself and how you fell into this all of a sudden? And what is your obsession with bots and Tesla?
Sure. Well, James, first of all, it's great to be on your show. Thank you for having me.
Oh, my pleasure.
Um, I co-founded a wealth management firm by the name of Brilliant Advice. I'm the firm's chief investment officer, and I've been in this business now for about 30 years. And so started really in the mid 1990s with the rise of the internet. And so that was another very exciting time to be coming into this business. And since then, I've always been on the lookout for the next great companies, and this one has really captivated me, and I think everybody will see why shortly.
Awesome. And, you know, are we in that transformative time in life right now? Like you've been in this 30 years, I've been in finance and markets for 34 years. I have never seen anything like this, but I've also never seen anything like the fact that something that is such a big opportunity is so downtrodden. And, even last year, I remember we hit like a little background story. Most of my Tesla price is about $17.50 until the opportunity came in late 2022, early 2023, when we hit that $104, $106 level. And that was a time to load up as well. But it's still, we are higher from where we were back then, but considering the value that this company has, shouldn't it be a lot higher? And we'll get more into this too. We'll be doing some modeling and a quick intro to everybody. The plan for today's video, I like to just riff and go, but we're going to go through why bots, why it's a revolution, why perhaps Tesla has an advantage, and then we will model, and we'll model bear case, expected case, bull case, and absolutely worst case scenario for the Tesla stock too. And we're going to go through a whole bunch more stuff. So, and don't forget, Cern Basher's details are below in the link. You'll see them there. And please follow him and subscribe to him if, as Herbert would say, if you want to get brighter. So here we are. Take us on the tour. If you had the very first slide to kick off this conversation, what would it be? And we'll go all around the world as we go forward.
That sounds great. Well, let's start with the first slide.
All right. Now
So
I've got to figure out how to pop it up. Bear with me, new scene, and
sounds good.
I'm going to share my. Let me see. I have to juggle a whole bunch of stuff here. There we are. Alrighty, I'm going to hopefully. Shit, we want to kill ourselves. New scene. There. All right, got it. The AI robots are coming. Tell
The
us a
AI
little bit more.
robots are coming, and I think there is a lot to be excited about. But just to your earlier point about such a downtrodden area. Most investors, most Wall Street analysts in particular, think of Tesla as an automobile company, and certainly 80 some percent of the company's revenues and profits come from selling vehicles. So that is absolutely true. And most of the analysts that follow Tesla are auto analysts traditionally. And so they're used to looking at companies in a certain way. They're not used to looking at Tesla as an AI robotics company. But that is clear. That is the direction that the company is headed, both with full self-driving software, which they've been working on for years now, and now with a newer project with the Optimus robot. So the good news is that it's not just Tesla, and I think that is beginning to help validate the opportunity in this space. The Tesla bot there is the largest one, front and center. We now have seen videos lately, announcements from Figure AI, which is the bot. It's to Tesla bot's lower right there, the shiny bot, um, to the bot's lower right, or I guess our left.
Yeah.
But there's also a number of other bot companies in this space as well. I should say at this point that not all these bots are made equal. Some of them have very detailed hands, some of them don't. Some of them are made simply to walk, and others are made to do things.
Yep.
Some of them need to be programmed precisely in order to do anything. And of course, Tesla and Figure and others are working on AI powered robots.
And that's the whole
We,
neural net, optics in, action out. Like, of all these
yeah.
players, there's only one other that has that, or the potential of that. Isn't that correct?
Well, that remains to be seen. I think we are in the early days, and we've seen a number of announcements from companies that want to get into this space. We've even had a company that's really just been a copycat of Tesla, and that's the bot in the red penalty box there on the lower right.
Yep.
So, it remains to be seen whether that one is real or not.
Yep.
But I'm sure we will see more announcements in the coming months and years ahead.
Okay. Should we jump to slide 2? We'll try burn through
Sure.
these real fast.
Yeah. So there's a
Okay.
lot of questions that we want to address today. First
Yep.
of all, why do we need humanoid bots? What are their advantages? What is this concept of useful work? What is the market opportunity for bots? How much will it cost to make them? How many bots will be made? And then we can look at some modeling in terms of the financial impact, in terms of a bot model for the economics of a single bot, what the industry potential is, and just an example of what I'm calling a growth pathway. And then ARK Invest had some.
Yep.
Um,
I'm trying to figure out how I can show you as well as your slides at the same time. Uh, we had it set up for you to be able to share. Apologies for that, everybody. But we are here. Trust us. Okay, this is good. The ARK
yeah,
Invest stuff was quite stunning, actually. The timeliness of that, and some of the things that they said. I know you have some slides on that too. Should we
I
jump
do
ahead to?
towards the end.
Or
Yes,
let's jump ahead to ARK first because we got some tons of modeling detail. I think is here. The ARK stuff I thought was very timely. I spoke to some of it yesterday. One was the $24 trillion market opportunity. The impact of automation in the past on productivity was super interesting as well. The 7x or the 33x improvement over the last 7 years is the top left one, I think. And companies need robots. I shared a stat recently. It was, I think, Japan will have, I can't remember what the number is, 20 million or 40 million shortfall in labor by the year 2040. That's 20 to 40 million people, which is kind of staggering. So the world needs bots. I think that's very clear. And that's why, as well, maybe Elon sees this as an opportunity. You want to?
definitely. It's an opportunity in so many different ways. The key takeaways for me from these ARK Invest slides is Amazon, a very large company, may well be on its way to having more bots than people in its organization. That may come this year, next year, perhaps the year after. But that trend is clear in terms of the number of bots that are deployed. Now, these aren't humanoid bots yet, but just in terms of deploying robots in some form in their business, it's clear that that's a big competitive advantage for them. And then on the top right slide, again, this is relating to Amazon as well, that they've seen that when they deployed bots, that they've been able to reduce the time from when somebody clicks an order to ship by about 80%. And so that's, you can imagine, also a massive competitive advantage.
Yeah.
We'll see this 85% drop in some other slides later. So it's interesting that that's kind of the impact when such a powerful new technology comes along, whether it's a washing machine or the time to manufacture a vehicle as well. It's come down that much.
And there was a very interesting statistic. I remember I saw it from Shamath Palapataya. He said over the next 2 to 3 years that AI will become 1,600 times better than it is today. And today it's already better than humans. Did you ever hear of that from him? He said it on the All In podcast back in December 2023, and that blew my mind.
Yeah, I don't think that we have any concept as to how much improvement we're going to see in AI. It will come very fast. But the nature of things that are exponential, even with such rapid improvements, because they're coming off such a low base, it may not be that perceptible. But very soon, very quickly, those gains build on top of themselves and become a very powerful force.
Okay. Let's jump. What other slides you like? I'll go back to the slide 3. Global labor shortage. This is clear. I actually modeled out Chris Kamago, I think, was on Herbert Ong's channel, and I modeled out his assumptions. And he also had some great statistics on the global labor shortage. Any big highlights here you want to bring up to the audience that you think are stunning and, shocking even?
Yeah, I think, first of all, credit to Chris for discussing some of this. I think this is important background. I think for people that worry about, losing their job, it will be potentially a long time before anybody will lose their jobs to bots. If there is a global labor shortage in 2030 of 85 million jobs, that's a lot of headroom for robots to fill roles before we have to start replacing people.
Hmm.
But the other important thing, and you mentioned this earlier, in terms of the demographic challenges that we face, that is also a building trend. And so as we head into the 2030s, 2040s, we will just naturally have a labor shortage because of demographics.
Yeah, it's interesting that I'm gonna pop us up so people can see us for a second, and we're going to go back and forth to the slides. It's not perfect, the slide sharing capability, but Elon Musk, I've been watching him for 20 years now. He has an uncanny ability to forecast the future and build synergies between ventures he's involved in. So, yesterday I talked about the top 10 disruptive changes coming to the world and how his businesses are in 7 of them. All the usual stuff that automation, AI, robotics, energy
Mm-hmm.
storage, self-driving cars, blah blah blah. Even Neuralink, biotech revolution, etc. happening. Do you think when it comes to robots, I know when you look at the staff recs that are up online, they're running 3 shifts a day, so they're running 24 hours a day on this bot stuff. And also, when you see what's happening in China, they are going all in on bots because they too have a birth rate issue. And Elon Musk has been warning the world about that for years. So, do you think that his vision of the world really having a birth rate, new baby issue is big? It's impacting countries like Japan, Italy, Spain, China, and now maybe one day the US, but the US has open borders, so that makes it easier to deal with that problem. So what do you think about that? Do you think Elon has it's part of his master plan, because he always plays like not 3D chess, but maybe 5D chess, and he puts all the pieces together in the back of his head somewhere, and then positions himself 5, 10 years into the future? Or am I dreaming?
No, I think you're exactly right. I think Elon has proven his ability to do that. And I think even further than that, and it's beyond today's discussion, perhaps, is what he's doing with Neuralink.
Yeah.
Ultimately, if we are going to compete with AI, we need to become a computer ourselves. And so putting a computer in our brain of sorts is a way for us to be relevant in the world where AI rules everything.
Mm, fantastic. Okay, I'm gonna try to hit one more button. That didn't work. Let me see if I can bring the slides back. Are they back? I can't even see. Nope. How do I do this?
Just while you're working on that, I'll just talk about the next one.
Yeah.
That a lot of work is dangerous and deadly. In the United States, in 2022, 5,500 people died from fatalities that are work related, and 2.8 million people were injured or became ill because of work. And so you can imagine then the cost in terms of the healthcare system and everything for that. Worldwide, the numbers are staggering. There's about 400 million people a year that become injured, and about 3 million people die. So there are a lot of jobs that, frankly, should be taken over by some other entity besides humans, and humanoid robots may fill that void.
Yeah. Okay, I'm trying to still juggling with a number of different things. This is embarrassing. I had it
The,
before, and now I don't have it again. I don't know what's going
the
on.
other thing, too, is that there are a lot of jobs that are dangerous. And the slide showed that, logging workers, for example, roofers, iron workers, truck drivers, farmers, fishing workers, garbage and waste collectors, construction workers, and miners were among the top most deadly jobs in the world. So if there was a way for us to find alternate ways of doing that so that people didn't get sick or didn't die doing those jobs, that's probably a good thing.
Hmm.
There are a lot of jobs from the past that are no longer with us. One example I'd like to use is in the days when we had horses for transportation, people needed to sweep the streets of all the horse manure. I can imagine that that probably wasn't the most enjoyable job. And I can't imagine people today bemoaning the fact that that type of job is no longer with us. So I think we'll probably feel the same thing about coal mining and other jobs like that at some point.
Okay, what I'm going to do is I'm going to play with this now. I'm going to try. I know what I'm going to do. I'm just going to minimize ourselves and show your slides. Why did I do this at the beginning? All right, so now we're both here and we got your slides back. There we go. All right,
Right.
let's go. Slide 4, dangerous and deadly. You just covered that, which is
Yep.
scary. Worker turnover is costly. Also, the fact that people don't turn up. They have a lot of overhead. I heard many factors. Actually, I'd like to hear your numbers. When you say, imagine somebody earns even number, 100 a year. That can be $100,000. When you add in the load, now the load is not just healthcare and benefits, but also furniture and computers and telephones and all the other benefits. What is your overall number? What does that 100 become per employee?
Well, I think it depends on what you want to include. I think it depends on the nature of the job. But some people estimate that the cost of turnover is up to 25% of that person's salary.
Well,
You have to recruit, you have to go through a pool of candidates, and there's a lot of energy and time and money spent doing that.
yeah.
At the lower end, it's estimated that about $5,500 is the cost of turnover, even for a lower wage employee. So whatever the number is, it's significant, and companies are feeling it, and particularly with companies that have high turnover rates. So Walmart, for example, turnover rates in the 40%, FedEx up to 100%, and the U.S. Postal Service about 60 some percent. So these are serious expenses for these big companies. And just to size the numbers, Walmart with a workforce of 2.3 million workers, this means they're looking for more than a million workers a year.
And I
So
read
you can
somewhere,
imagine the cost.
and not only is the HR department very busy training new people, but it takes
That's right.
somebody between 4 and 6 months to become productive in a new role. Have you heard such statistics as well? So
Again,
not,
I think it depends on the nature of the
yeah,
work, but yes, that definitely is a challenge. A
okay,
challenge, yes.
okay. Employee
And then,
theft and fraud.
and this is huge. These numbers are kind of staggering. Theft apparently costs U.S. businesses around 50 billion a year, and fraud is also a big item.
So
Um, and and also,
is this on average? Because I never heard this before. Do employees like steal paper clips from the business, or produce, or cash, or
well, it depends on the nature of the business. Certainly in retail, the number here on this chart is showing that the average retail employee costs their employer $1,500 a year. So I guess they're making up for their perceived low wage, and
hmm,
you know, taking some of the items with them.
well, interesting.
The other big problem that is even larger than the 50 billion to theft is people getting paid for hours that they don't work, and apparently that number is about 400 billion a year.
Well,
So these numbers are pretty staggering.
yes, indeed. And this one was flying around Twitter. It was very super. But you highlighted the yellow ones. Robots never quit, which is, we just talked about the turnover, expense, and cost. They don't go on strike. Speaking of that, do you believe, when Elon's thinking 5 steps ahead, you think he's concerned about unions down the line with all the stuff happening in Sweden and the US and stuff? And that's one of the reasons for the big focus in robots, or not?
Oh, I think business owners everywhere need to be concerned about everything. All these things on this list that the robots address are issues that business owners worldwide face, some to different degrees than others. Some have a problem with workers quitting, some have a problem with unions, some have a problem with drugs in the workplace. You name it. These are all major issues to different degrees for thousands of companies.
Yeah, one of the biggest issues I've seen is when employees sue the employers. That can be a real headache as well. Is that listed here? Well, labor's disputes, I guess.
Yeah, I guess that
Or
would fall into that category and the associated legal costs with that for sure.
yeah.
Yeah.
All right. And trust me, we'll get to modeling real quick. Scott Walter, another guru in the space. What is this about?
Yeah.
What is this work?
So there's a lot of discussion about, well, the robot is putting, it's walking. The robot is putting a pod in a Keurig coffee machine. It's not really doing anything useful. It's going to be decades before these robots are useful. And Scott today posted this on X and pointed out that useful work actually is a very low bar.
Hmm.
So once it can perform a task currently performed by a human at the same efficiency, reliability, quality, and endurance, at or below cost parity with the human wage, then it becomes useful. And that actually is a pretty low bar in many organizations. It might just be moving items from one spot to another, feeding a machine all day long. And for a human, that becomes pretty dreary work pretty quickly. For a robot, they could do this 22 hours a day, 7 days a week,
Yeah.
right? 365 days a year.
And I always remember this. It was the first time I ever had an experience with a robot. It was probably 8 or 10 years ago in Narita Airport in Tokyo, in the lounge. It was actually I think it was in the Nippon Airlines lounge, and they actually had a robot serving drinks like beers and pouring them
Mhm.
perfectly, tilting the glass, and the beer would come out, and just you just sit there and wait. You just hit a button. I want an Asahi beer, and it just did it. And like that's nearly 10 years ago, and that definitely replaced a job. So ever since then, I was like, wow, what will the world be like in 10 years? And now you can get a coffee at a mall with a robot, and you can get directions from a robot in public places and stuff. So they're definitely here. Now, this one, I actually referenced this one yesterday in my video because I never thought about the analog of the oil industry to the labor market globally. And this was fascinating. So I think this one, it just shows you the sheer size of $105 trillion. No, billion
105
dollars per day.
billion
Billion
dollars
per
a
day.
day.
Yeah.
Yeah, I decided to put it into daily terms because looking at it annually, the number is so big, it's hard to get your mind around it. But even $105 billion a day in labor costs is a huge number. But relative to the amount of revenue that the oil industry earns a day of about 19 billion a day, the labor market is about 5.5 times bigger than the oil industry.
And then you got the auto industry, it's 6.8 billion a day of revenue.
Yeah, it's
So
big too, but nothing quite like the oil industry.
awesome. And sizing the Western
Now,
world.
yeah, this one, if we find ourselves in a situation where, we determine robots to be the ultimate espionage machine and we ban Chinese robots from operating in the US and Europe and other Western countries, that would also mean then that we wouldn't be able to sell our bots into China. And so just looking at that subset instead of the whole globe, it's about 500 million workers. And the ratio there of the labor market to the oil industry is about 9 times.
Mm. And I was actually thinking a lot about this one because, if these things are as good as we think they're going to be, and they're going to learn so fast, and things will be 1,600 times better in 2 years. And of course, the hardest part is from the mechanics of the robot and the agility of the fingers and the walking. That seems to be licked right now. The real issue is the brain part, which they have to some extent in the FSD. But if Tesla create this robot and it becomes a massive competitive advantage for a country, and I'm thinking out loud here, could it be banned? Like you mentioned, the US government just slap down their fist and say, hey, you're not allowed to sell these to any competitive nation, or only these select nations, or only these select companies within this nation. Do you think that direction is actually coming? And the advantage of these bots could be so extreme that it could generate tremendous abundance within GDP growth of said country.
The short answer to that is yes. A little bit nuanced answer, perhaps, is that the idea of banning robots either within our country because it's taking over labor and concerns about that, or limiting it to other countries, then it's going to force those countries to find alternative sources of robots, and they might find them from other countries that we not might prefer that they don't. So you have to be very careful with such a powerful technology because, banning things often, people end up finding ways around it.
Yep.
And particularly with a technology that's so powerful. But yes, to the second part of your question, in terms of the potential for accelerating economic growth, absolutely. And we'll see in some charts here in a minute, sort of why that will happen.
Okay, let's go to slide 11. Bot cost.
Yeah.
12,000. That's cheap.
Yeah, well, the other big discussion is around how much will these bots cost, and some people say, "Oh, it's going to be $90,000 or $50,000." But the way to think about it, I think, is compare it to a car.
Weight, yeah.
So, Optimus bought 120 pounds, a Model 3 around 4,000 pounds. So it weighs about 3% of the car. Even adjusting for the weight of the battery pack, which is a big percentage of the weight of the car, it also happens to be relatively the same percentage of the bot. So it's still 3% without the battery pack. Now, a couple of people have sized up the cost of the different components that go into the bot. This is one from Tesla Talk. He estimated that the bot costs maybe around 12,000 to build. On the next page, Scott Walter shared his numbers with me, and his estimate is around 9,000.
Wow.
Now, this may not be this year. This is at some point when there's enough scale that the manufacturing efficiency kicks in and you can make bots at scale. So it does make sense that even in Scott's example here, the bot costs 28% of the cost of the car, even though it weighs only 3% of the car's weight.
And I noticed here in this one, the actuators are half of the cost.
Yes.
Do you want to tell people in a nutshell what an actuator is? If you asked me 2 years ago, I wouldn't have known. And why it's so difficult to get them or design them or make them, because I remember the big complaint from Elon Musk is we couldn't get actuators. We had to build our own. Can you talk about why maybe that is hard and why it's a competitive advantage to be able to design an actuator that you can build at scale?
Yeah, I think that because this is a new industry, there's no real supply chain for making actuators at any type of scale, and probably even to the spec that these companies need and want. An actuator simply is a device that makes something move. And so if you're doing a humanoid robot, there's a lot of different moving limbs and parts, fingers, and so on that need to be actuated so that they can move. And so Tesla Optimus bot, I believe, has 42 actuators as it currently stands. So, the more different ways of movement, the more actuators you need. Potentially. So that's where the big cost is right now. This is something that will undoubtedly come down in cost as they scale and start to make millions of these.
Ballpark $100 a pop based on these numbers at scale.
Yeah.
All right. How many bots will be made each year? These numbers get really staggering, especially the one thing to consider is if the bots start making the bots, then the numbers can get crazy real fast. Walk us through this.
Right. I think the bots certainly will start assembling bots for sure at some point. But yes. So another way to look at this is to say, okay, the largest automakers in the world make about 10 million, 11 million vehicles a year. Okay. And the whole industry makes, say, between 70 and 80 million in any given year. So if you adjust for the weight difference, and if these automakers could make bots, then they could produce 2.5 billion bots a year as an industry. Okay. On the other hand, if you look at the smartphone business, Apple sells about 200 million phones a year. Samsung sells over 200 million a year, and the industry sells 1.3 billion a year. And if you adjust for the weight difference there, the smartphone makers could make about 13 million bots a year. Wow. So the bot's between a vehicle and it's between a phone. Now, I think the constraint here is not so much to do with weight, it's to do with the market opportunity and the market size. So if the smartphone industry is selling 1.3 billion devices, there's not much room, to sell more than that, because how many phones do we all need? Do we all need 3 or 4 phones? No, we don't. Whereas in the automobile market, the constraint too is the market opportunity. So this becomes more of a question about what the ultimate market opportunity is for bots rather than the manufacturing capacity. These manufacturers will scale up to whatever the market needs, right? And if the market needs, 200 million bots a year, then these companies will eventually find a way to make 200 million bots a year.
So you don't see any limiting factor out there because batteries are kind of smaller, the amount of materials are small. Probably the limiting factor is how fast can you create 42 actuators times 200 million bots. Would that be the
Right.
limiting factor? Yeah. Okay.
Those will be the issues in the short term. If you say that the limiting factor might be batteries, well, just for comparison's sake, if a car Model 3 has, let's say, 3,000 2170 batteries, if Tesla's making 10 million of those, or 10 million cars at some point, that's 30 billion batteries.
Yeah.
How many bots could they make with 30 billion batteries? Well, it's 200 million a year.
And that's the 2.3 kilowatt pack.
It's about
Yeah.
140 batteries in a bot.
Yeah. Well, incredible. Okay. Potential. Well, we're going to model some potential, but let's talk about the way in which we'll approach the valuation model when we start playing with numbers. Your whole vision is to lease them and then calculate a percentage of a typical hourly rate and then multiply it by a factor for the multiple of hours a bot can work. Does that sum it up sort of correctly?
Essentially, yes. First of all, just to touch on why bots, I think, will be a subscription model rather than sold or leased. That's how companies pay for labor today. They pay for it as they go. They don't own the labor, at least in modern times. Companies don't own their labor. It also reduces the risk from companies wondering how long these bots will last and dealing with warranty and all that kind of thing. It's just much simpler if the bot maker puts a bot in service and then becomes responsible for replacing the bot if it needs replacement 6 months from now or 6 years from now. Their subscriber would just continue to pay the same monthly price. It also gives them a lot of flexibility, that the bot makers a lot of flexibility to adjust their pricing as the bots become more capable. Because with a software update, the entire fleet could suddenly be more capable tomorrow.
Yep.
And that's what we already see with Tesla's vehicles.
Yeah, the joke I had with Hans Nelson was, by day you're assembling vehicles, by night you're making sushi or something at the house. So, and yeah, you could just pay as you go, like a la carte, like buying an app on the iPhone store. It's like, okay, I want my factory line assembly worker, and then I want to buy 2 hours a day, the sushi chef feature, and then maybe in the summer I want to get the gardening app, things like that. And I think that would cause infinite potential. But I see here you got your bot price per hour is only $5. That's extremely low. Or is that just a global average labor rate?
Yeah, actually, if we could just go back to the previous slide, I just want to compare for a second Chris Camillo's model with the one that I had, using his model as a baseline. And he's looking at the year 2030. Okay, so it's not too many years away. And he was estimating that bots would work 16 hours a day, 350 days a year, and the cost of the bot would be just under $17. So the revenue to Tesla or any bot maker would be $94,000. In my model, I had the bots working a little longer and making a little less. I'm assuming the bots maybe aren't quite as capable as what Chris was assuming, and therefore they wouldn't command as high of a price. So I was being a bit more conservative in my numbers. He had a cost to make of about 30,000, mine was around 20, and so on. So my expenses were a little higher, and he has gross profit per bot of around 84,000, and mine's just below 50. And Chris was using a number of 1.5 million bots in service by 2030, and he gets to a valuation for either Tesla or the bot industry, if you want to look at it that way, of $10 trillion. So this is actually quite instructive, because even with a small number of bots in service, 1.5 million is tiny, the industry size is already enormous.
Exactly.
Or potentially the value of Tesla if they're the one doing this.
Like they
Now,
they,
in
they
my
can nearly, by the way, they can nearly spit out 1.25 million cars out of Giga Shanghai already. So if
right,
they can do that today, they could easily do 10x that with bots, considering the material factor and the weight factor and the limiting factors of batteries, etc. Would you agree with that?
Absolutely agree with that. Again, the bots weigh 3% of the weight of the vehicle. It's a lot less mass to move around. And to your point earlier, the bots may be able to assemble themselves in some ways.
Yeah, even repair
Yeah.
themselves down the line. Okay, this is super interesting. Look forward to modeling this real soon. Okay.
Yeah. So back to this slide then. The difference here is looking out a little further in terms of the industry's potential. And I'm assuming that the cost of labor, the cost of the bot labor comes way down. And this relates to that 85% drop that we see in the cost when new technologies come about, right? The cost for Amazon, the time from click
Oh
to
yes.
ship dropped
Yep.
80%. I think too, ultimately, the cost of labor will see a similar decline. So when I model things out into the future, I'm using very low numbers for the cost of labor. Now, this is beautiful because this will be a gift to humanity. The cost of the products and services that we buy that are made by bots will become so much cheaper. We're going to see enormous deflation in many of the things that we buy over the next couple of decades.
Which is a double-edged sword, because what you will also be doing is taking away the income from many jobs, many people. You might be making things cheaper, but they may also have less disposable income to buy things that are cheaper. Do you agree with that?
Well, yes and no. So if we ignore all of history, then perhaps. But so far, all of history tells us that whenever a new technology comes along, we've always created more higher paying jobs every single time.
Hmm.
Right. So if we accept that as normal, then no, that we're only going to create more and more, and there'll be more jobs, higher paying jobs, and the economy continues to expand massively. However, I do hold out the chance that this is different. That ultimately AI, embodied or not embodied, is different, and it is possible, perhaps, that we're putting all humans out of work. I hold out that possibility, 40, 50 years from now, that may happen.
And I'll throw another curveball at you. What happens if the top 0.1% of the world actually own and control the bots? Therefore, they own and control all the output, therefore, all the wealth. True?
Well, potentially, and I think we've seen this with a lot of technologies already. They're kind of winner take all kind of technologies, and we've seen a lot of companies, the Magnificent Seven, for example. Those big companies, it's been kind of a winner take all market for many of them. So this is probably very similar in that regard. But if that's the case, if just a few people end up getting all the rewards from this, then I think they run the risk of some kind of revolution. Because if everybody else is starving in the streets, that's not going to work for long.
Well, you keep triggering questions with every response. Magnificent Seven. We're going to go off the track. I'll come right back to this in a second. There's a lot of talking heads on CNBC, etc., saying, "Oh well, it's really just the Magnificent Six now because Tesla's dropping out." Is that the most nonsense you've ever heard? Just because how these people think, or do people really not have a clue of what's happening here? And related to that, do you think Tesla is in the catbird seat for this revolution that's coming?
Yes. So the first part of the question, I mean, look at where Meta was a year ago.
Yeah.
Look at where Amazon was a year ago. Wall Street left them for dead as well as Tesla a year ago. Those two companies, Amazon and Meta, have made remarkable recoveries. Tesla made a remarkable recovery last year, and it's dipped again this year. Wall Street really doesn't think straight, in my opinion, about these companies. They're so short term focused. They are missing the big picture. And I think Tesla, as excited about Wall Street is about AI, Wall Street is completely missing the opportunity, the long term opportunity that Tesla represents in the AI space with self driving vehicles and humanoid robots.
Who is the leading AI company on Earth?
Well, I think it depends on what you mean by that. In terms of real world AI or embodied AI, I think that has to be Tesla,
Yep, real world. Yeah.
right? And I think that ultimately is going to be probably the biggest opportunity.
And it's funny because you mentioned names like I got into when Meta fell into the 90s. I got into that big and got into Nvidia almost the same week or even the same day that Kathy Wood sold it. It was kind of funny. It was 160 or 180, and I still have part of my Nvidia. I sold my Meta at the end of the year, but when you look at the Meta Nvidia charts, they're both up nearly basically 400% over the last 14 months, which is astronomical for companies. Like, I think there was one week or in the first 10 trading days of the year, Nvidia added $350 billion, which is bigger than the economy of Colombia or Iran and things like that. It was just mind blowing growth of these things. So when you look at these analogs, does that make you bullish for Tesla? The fact that nobody realizes the value yet and it's going to
Well,
come in time?
absolutely. Absolutely. And just look at this slide. So at 150 million bots in service, which again, I don't think is a huge number, if the bot is only earning $5 an hour, that's an industry valuation, or if you want to call it a Tesla valuation, that's fine, of 240 some billion, $240 trillion.
Hmm.
Okay. Now, you could argue that maybe the PE ratio I've used here is too high, but 150 million bots in service, I think, is scratching the surface of the opportunity. So the PE would still be quite high because the growth would be high.
Yeah.
Not to mention the profitability. We're looking at very high net margins here.
In fact, I've calculated in a completely sandbagged PE of a bot trajectory. You cannot have a PE of less than 80, and that is sand. That's like trading a utility company at a PE of 2, with the growth
Mhm.
rates and the earnings potential. PE of 80 is absolutely bare minimum. So is that your PE here of 30? That is ultra conservative. No offense, sir.
That's at
Yeah.
a billion bots applying a PE of 30, you get to a $450 trillion industry. I'm not suggesting this is all Teslas, but there's more than enough for everybody.
Yeah. Okay.
We are, I believe, witnessing the birth of what will become the world's biggest industry.
And also the biggest revolution ever, whether it's take the industrial revolution, multiply it by a factor of what, 100 or 1,000. What factor would you apply to this revolution?
Yeah, that's a good question. It's the number of, whether it's got two zeros or three zeros after it probably doesn't matter. It's a big number.
Yeah. All right.
Yeah.
Well, I'm really excited to get to some modeling. So we got the bot deployment growth pathway. We're going to work on this actually in our model. How are you doing for time, by the way?
I have all the time you need.
Great. Okay. I hope the audience is still with us. Of course they are. They love this stuff because people that know what Tesla is, they will consume content 24 hours a day. So they don't have a problem with this. So thank you all to the audience for being here. Hit the like and show Cern some support. Don't forget to subscribe to his link below. All right. Bot deployment growth way. Should we look at this in the actual model itself? Or you want to talk
Let's
to this
just
real
touch
quick
on
here?
one thing here before we
Okay.
leave. So the bot hourly rate there in pink or light purple,
Yep.
I've got it going from $20 an hour all the way down to three,
Oh, wow.
and that's an 85% drop in the cost of labor. And so again, this is a massive gift to humanity. If the cost of making things, assembling things, moving things, and all the stuff that we use human labor for drops by 85%, that frees up a lot of resources in the economy to spend on other things.
Hmm.
So there'll be a lot of growth in other areas too. It's not just the bot industry that will benefit, it's the entire economy because now that money can be deployed elsewhere.
Incredible. That's scary. 2040, $3. And by the way, per my calculation at the rate of money printing and debasement, $3 in the year 2040 will be like 50 cents in purchasing power terms today. So just
Yeah.
for everybody to know, that's probably the most staggering number I've seen today. Um, and you're confident in this? Or you think that the bots can
Well,
just scale so much and there'll be a billion of them that they can take the labor down so much because there's so many of them and they're so productive?
they are profitable at that rate. And if the industry revenue is 31 trillion, as it's showing there on that last line, it's a massive industry. If the profit margin is 50%, you're looking at $15 trillion of profit from 1.5 billion humanoid bots.
Wow.
Which again, I don't even think that's the upper limit. We haven't begun to talk about bots being deployed off of Earth. I'm just talking about bots on this planet.
That's right. That's the other angle. The workforce to get Mars ready will have to be, as you said, for those dangerous and dirty jobs, will have to be bots. Okay, potential
Yeah.
global deployments. 1.5 billion I see here.
Yeah,
Uh,
the interesting thing about this chart is it's the hockey
2020.
stick up to the right. But if you look at the early days,
Yep.
and I don't know what these numbers will be. I've modeled 10 bots shipped this year, 100 next year, 10,000, and then 100,000. So in the early days, 100,000 bots 4 years from now, you would say, what was all that noise about bots all about? Nothing ever came of that. They were talking about that 3, 4 years ago. Well,
Hmm.
okay, just wait a few more years, and you get to Chris's 1.5 million. And the industry valuation is about 10 trillion, or by my numbers, about seven. And I've said, what's 3 trillion between friends? But beyond that, look at the growth and how big this becomes. It quickly gobbles up labor when you head into the mid 2030s.
What's interesting about that growth, though, it's not an S curve, so it could actually go a lot higher.
It could.
Yep. Okay.
I think I've been very conservative here for the
Yep.
next 5, 6 years.
Okay. 16. Bot industry revenue. We'll model that out too. These are
Yep,
billions. That says 35 trillion at the top there.
35 trillion.
Wow. Yep.
And by that point, it's taken over about a third of the global labor force, assuming that one bot replaces one person. I think by then, actually, a bot will be much more productive than a person. So it's quite likely that a bot would replace 2 or 3 people.
Unbelievable. Okay. Bot deployment growth pathway. Again, this will follow an S curve. I like the way you've got 2027 to 2028 doubling. In fact, when we get to the model, we'll see how we can tweak that, both growth rates and then throttle the growth rates over time to
Hmm.
represent an S curve. So this is good. Any big pull out here you have? I see the pink is still
Yeah,
there.
the last two columns, the PE and the market cap for the industry. I've got the PE starting at 200,
Mm.
right? High growth, high profitability, huge market opportunity. You get a very high PE, and then I've got it going down all the way down to 36. And so, as much as the industry grows, I'm really bringing down the valuation in those out years. And the market cap of the industry is over 500 trillion. It's nutty, even with a low PE for such a high profitable business.
And wandering off the reservation again, do you want to tell the audience how capital efficient Tesla is compared to other companies? What they can do with so little? And have you given any thought to the R&D budget to pull this off?
Well, first of all, I would say it doesn't ultimately it doesn't matter in some sense. There's enough in this industry for many players. But yes, Tesla has some massive advantages in the terms of their manufacturing prowess, their ability to build things and not have to spend as much money as their competition. They're just very efficient with their capital. You compare Tesla's capital expending expenditures to lots of other big companies, and Tesla is spending a lot less. And so you can't just look at the amount of money a company is spending. You have to look at how they're spending it.
Yep, very good point. Let me see. Potential global bot PE ratio. Again, I'd argue with you here on the PE ratio because you're not even taking into account S curves and you're throttling not only the labor cost per hour over time where the money is debasing, but also you're attaching a very low PE. So I think for the first time ever, I've met somebody who sandbags more than I, which is
Yeah,
unbelievable.
I'm
So,
I'm trying to be conservative with this
yeah,
because again the numbers just look so crazy. Even the numbers I have here at
yeah.
500 trillion of industry market cap are it sounds ridiculous to say it.
Yeah, well, okay, we'll get to that in a minute. We'll be able to, for the audience, convince people with very sandbag numbers as to potential of this as well. Okay, industry profit versus
The
market cap.
the takeaway with this one is the market cap will go up earlier and faster than profits do
Yes.
because you've got a high PE initially, a high growth rate initially, and the profit will come later. And at that point, then actually the PE and the growth rate starts to come down. And so the market cap maybe levels off.
Yeah, which goes
And
back to the
so,
which goes back to the question we had earlier. That is, markets are supposed to be forward looking, but with Tesla, they're not. So again, off the reservation here, how much of that is because of the animosity towards Elon Musk and political stuff with Twitter, etc.? If you were to add a load,
Well,
like
I
a Meg,
think that's a big
yeah,
part of it. There's a lot of headwind that Tesla faces every day from negative press, negative
oh, yeah,
headlines, political attacks, you name it.
like
So that's certainly an element.
today it really got my goat, as they say. I think that's an expression. It was about the display font, I think, on the dashboard, and a recall of the lights. Like literally, you can step into any car, whether it's a GM, Chrysler, Ford, a Toyota. Like I stepped into a RAV4 the other day. I guarantee you, between the contrast, the lighting, and the font, it was unreadable. Now, how would GM, Ford, Stellantis, Toyota go about changing their font on their dash? It's impossible.
Right.
But is the NHTSA nitpicking them to death, or is it valid?
Well, they certainly seem to be. I mean, perhaps they're well-meaning and everything, and that's great. But I think it's frustrating when you call everything a recall. And I
Mm,
think for the general public, a recall means bringing the car back to the dealership to have work done,
yeah.
and that's not at all what's happening. And so it's unfortunate that we're stuck with these old terms for these things that don't really have any meaning.
I even read a
Um,
press release. They had to bring in and recall 5 million headlights. They completely misinterpreted what the recall was about, which is a simple over the air update. It'll be fixed tonight or
mhm.
yesterday already. But, if your average person reads, "Oh my God, Tesla doesn't even have headlights now. They all need to be replaced." It's just the fear porn sold by the mainstream media is just unbelievable, and Reuters is the worst, and Barron's and all these guys are just terrible. Anyway, moving on from that. All right, we still have a long journey
And, and
left.
I and I would just add too that one of the reasons that might be the case is that a lot of the automakers do a lot of advertising, and
Yeah,
certainly to the extent those automakers are ultimately threatened by Tesla, or perhaps they go out of business eventually, then that advertising revenue would dry up for many of the media
yeah.
organizations. So they're feeling the competitive threat there too.
That's exactly why CNBC entertains clowns. And you know who I'm talking about. I won't drop any names, but two of the worst analysts in the history of planet Earth are on all the time. And it's like, and one of them happens to have a relative who ran a big department, I think at GM, if I'm not mistaken. Anyway, let's go. Arc View. Let's try wrap up these guys in a couple of
Hmm.
minutes and then get to modeling.
Yep,
Uh,
we can skip this. I think we've covered
yeah, the arc
ARC's
stuff.
view. Yep.
Okay. And don't forget, you'll see Cern everywhere, everybody, especially
Yeah,
if
I
you're
was
over.
just going to mention on this one, if people are interested in diving more deeply into the bot models that I have developed, there's a bunch of videos out there for their interest.
Yeah, awesome. And great work you do. This is great here. The tipping point when the world either realizes or when the business value goes from Tesla being considered a car company to an AI robot company. What year would you peg this at? 2 years from now?
Well,
Next
it
year?
depends. It depends on when bots will be rolled out, and it depends on when robotaxi becomes a reality. And so I don't know precisely when that is. In this particular example, 2027 is kind of when things really start, and by 2030, by 2029, the valuation of Tesla would solidly reflect that it is an AI powered robot company.
And typically, the market will get. It really is a function of how long it takes the Wall Street analysts to pick up on the value here. Morgan Stanley is in the lead, but still they're slowly coming around. But when do you think the rest of the analysts will see this and be as clever as
It
Cern Basher?
it will happen, I think, when the industry develops, and so we're seeing with Figure AI potential rumors of another fundraising round. It starts to get more people's attention, and particularly as big companies, if Microsoft, for example, and OpenAI make an investment, again, that gets more attention. And then it'll certainly get Wall Street's attention when there starts to be some IPOs potentially of some of these companies.
Mm-hmm. Yeah.
right? That's when they really get their attention because that means revenue for the Wall Street firms.
And was it Figure that partnered with BMW for some
Yes,
bots?
that's
And
right.
but Figure don't have the ability to scale manufacturing to support a client like that, do they? From what I understand.
Well, that remains to be seen. They know that it is an issue. It's kind of one of their three things they have to work on. They have to work on the mechanics of the robot. They have to work on the robot's brain, the AI part, and they have to solve the manufacturing problem. I've speculated that perhaps BMW could be a manufacturer for them.
Exactly. So that it would be what I would call a spin in down the line. You know,
Hmm.
partner and then buy and then
Yeah, potentially.
co-develop. Yeah. Okay.
I think we're in the early days of that. Who knows? There may be some other partners that come to the
And
fore.
those three problems you mentioned are all very easy: scaling manufacturing, the brain, etc.
Right.
Madness. All right. Tesla revenue.
So Tesla is comprised of many different business lines. Certainly, making electric vehicles is the primary one, but there are lots of other things. And I put this table together to show people all the different things that Tesla is involved in. Um, some of them are small, some of them are big. I've built models for six of these areas. The auto bidder software for the energy business, the supercharging business, autonomous vehicles, humanoid robots, and then distributed inference is a potential area as well. So I wanted to try to build a model around these internal startups, as Elon likes to call them,
Yep.
and
Beautiful.
see what the potential is for each business. And so I've done that, and then now I've built a model that combines them all and looks at this over time. And that's what some of the other charts we have here are.
Good. And we're going to actually model this right now live with you to see if the model that we play with lines up with yours. And then also do those different scenarios, bear, super wrecked status, expectation, and bull too. All right, internal startups. Good. Shall we start modeling, sir? Unless there's any slides
Sounds
we
great.
were missing. All right.
No, that sounds great.
Okay, this is going to be exciting. Now, let me see if I can juggle this around. You can tell this is live TV. And this is the Robot Revolution. Don't forget, everybody. Where is it? Here we are. Cern valuation model. Um, all right. Now, I shared with you kind of an outline as to how this thing works. We'll start at the beginning. We'll start at the starting year, 2024. And the reason for that is, like, I don't know how much we're going to model and which things we're going to look at, but we will play with, make sure all of this is showing as much as possible. Yeah, because we'll need all the real estate. Certain things are driven off fleet size, like inference that you mentioned. And we have the start period, and then we have fleet size growth rate, because a lot of stuff initially will be driven off of fleet size. Then we'll go to all of the lines of business. We can add any lines of business to that we want, and we can tie them to fleet size by checking this box here. All right, but let's just look at bots first. And this is going to be the Cern model, and we can change numbers. The way we can kill the other lines of business as well is just change them to year 10, and that pushes them so far into the future we don't even see them.
Hmm.
But where would you like to begin?
So let's start with bots. I'm just going to pull my numbers up here to make sure that.
All right.
There we go.
So
Okay.
originally, this is funny. When I did this with Herbert, we started bots in year 9, which would take us to 2033. And that was in December. So right
Yeah.
now, Elon says they're going to be shipping next year. And I know we should take everything Elon says with a grain of salt. But do you think that's achievable?
Oh, I think it's definitely achievable. I wouldn't expect them necessarily to ship a whole lot. Hopefully, we're pleasantly surprised on that.
Okay. So,
But I think it's reasonable to assume it's still going to take a few years for bots to become as useful as we would want them to be. So let's go maybe a couple of years out, and we can start the ramp from there.
okay. So we start, that would be 2026 would be the start year. And
Okay.
then
And I have in my model 10,000 bots in that year.
10,000. Okay. So we start with 10,000. And then the growth ramp, I have 200%, but shrinking by 10% per year. Obviously, 2% gets very exponential. This is where it gets really tricky
Yeah.
modeling it out. So,
I have 100,000 in 2027. So basically a 900% increase year over year for the
okay.
first year. So then that growth obviously comes way down as it scales.
Well,
But
we
in
can
the
check.
early years,
Yeah. Let's check this with units. Let me turn off all the other stuff. So we make everything else year 10. And then we won't see it for now. I just want to focus just on bots to make sure we're on the same page. Robotaxi, year 10. Fleet, year 10. Bear with us, everybody. Mega back order bidder, year 10. This way we'll just see the core stuff. Dojo compute, year 10. And solar heat pump, year 10. All right, now we go to the export chart. And here we have units. So it might look a little bit small to see, but actually you should be able to read those numbers. You said 2029, 700,000, was it?
2029, I have a million bots being made and total deployment of 1.6 million.
All right, let's go here. We had 10,000 growing at 200%, so we need to go, say, 300%, and then we can check the ramp. That would
And
be
my 2034 number is 28 million bots deployed.
2034. Okay, I got 535 million. So we need to throttle this some more. So we can throttle the growth rate by 20%. And then see where that gets us. 434 million. Whoa. Let's take this down to 35%. And 315 million. It's still too high. Boom. It's like minus 50. 225. It's still growing way too fast. So let's take an anchor point. 1.5 million by 2030. Does that sound ballpark? That sounds like a Chris Kamago number almost.
Yeah, I have 3 million in total deployment by then.
Okay. So we need to up the ante here and increase the reduction here. This is I should maybe configure it so we can
The
do
challenge
it.
is we're starting from such a low base.
Yeah, and we're going up such a high amount. Yeah, these numbers get kind of crazy real quick. So let's just keep it conservative at 200% because I kind of anchored on that with the growth rate being shrunk by 60% per year. Whoa, what just popped in here? Bots 200% minus 60. Dojo. Minus 40%. And then we go here. So it still takes us to crazy numbers. Let's try just focus out to 2030. I think going out further than that, things get kind of nutty and crazy real fast.
Mm-hmm.
What do you think?
Yeah, so yeah, I have about 3.1 million bots in deployment by 2030.
Okay, I think we started with 10,000. Oh, what is yellow here? Insurance. Hold on a second. Where is insurance coming from? Make this 0. All right. There's something weird going on. Oh, superchargers. My bad. Superchargers need to be killed. There. All right. There. Fixed. Sometimes things creep in. All right. So 2034. Now we're at about 15 million. 2.5. I think these are. Actually, these are too low still for 2030.
Yeah, if it's 2034, I have a total bot deployment of 28 million.
Okay. 28 million. Then we can jack this up just a touch to 20%. I should take us close. 28 million on the nose. Look at that. That was a hell of an estimate. Oh my God. All right. That was luck. Okay, so now we have the units. So you're happy with those, but 2032, 4 million bots is still very substantial. 2030, 500,000, possible. And we can tweak these down the line too. Now let's get into the angle here. This piece is most important, is average sale price per unit, and we can turn this into the revenue that Tesla gets per unit, and then we can calculate a percentage profit from that, profit margin, which is here at 50%. I think that needs to go a lot higher based on your numbers.
Yeah, I'm comfortable with modeling 50% margins. I do think it's conceivable it's higher than that, but that's, I think, a pretty safe number. In terms of the sale price, again, I'm looking at a subscription revenue. Um, in terms of annual revenue for the bot of about 60,000 a year.
Yep, I have that in. And that's going down by what factor? Dropping by 15% per year as they scale?
It's yeah, it'll drop by 85% over 15, 20 years. So
Okay.
might be dropping by 5% a year.
I put 6 in. Let's see what this looks like in terms of revenue. And we'll jump here. Now, let's see how these revenue numbers shape up to what you have. A little bit hard to see, but like 2030, it's $25 billion. What did you have for 2030?
In terms of revenue,
Yeah.
um, sorry, just
In 2034, it's $1 trillion in 2034. No. It's more. It's $1,000 trillion. Gets really nutty.
Yeah, I have a bot's value of about 34 trillion in 2034.
Are you talking revenue or valuation?
Valuation.
Okay, let's go back then to valuation. So here, I put a multiple in of 80. You took it down to 30 in 2034.
No, it's 30 in out years when you've deployed, a billion bots in the world. If you've only deployed 28 million, the multiple is still going to be very high.
Okay.
I would even use 100 at that point. Still,
Right.
that would just be a nascent industry, even at 28 million deployed.
So if we jump to valuation for bots here, well, what I did was I turned into stock price, which is valuation, and that would be 2034 would be $13,917 per share, based on the 3.3 billion shares increasing by 3% per year, not taking into account the recent stock plan stuff.
Right.
So, how does that jive with what you have?
Yeah, I think there could be more dilution than that. But again, I'm not going to quibble over a few trillion.
Yeah. What did you have for a 2034 stock price?
I didn't calculate a stock price. I calculated just a valuation. I decided not to worry about the number of shares outstanding. That will just be whatever it is. I would imagine that Elon will find a way to get a compensation plan that rewards him quite handsomely if he produces market value for Tesla of 5, 10, 15, 20, 25 trillion, whatever those numbers are.
Let me check. Just to get your market cap, say $14,000 a pop. This would bring us to 56. These numbers are just so crazy. This takes up to $56 trillion. What was your market cap?
34 trillion in
Okay,
2034.
so I'm higher. So if we move this back down to my 80, that'll be bang on with what you have pretty much. Expert chart. Whoa, what happened here? Stock price. What creeped in there? Um, all right, 100 export chart stock price 14,000. Yeah, so I'm slightly higher, but if I take it back to a PE of 80, which is what I had, I'm about 38 trillion, which is nuts. All right, so imagine we have that. Do you want to create a sandbagged version of bots, like a worst case scenario,
Well,
or would you say this is already sandbagged?
this is pretty well sandbagged, in my opinion. The bot deployments of 28 million by 2034, I think, is a pretty low number.
Yeah, let's go to units again. Make sure we have that correct. Uh, 28 million bots, 2034. Yes. But how do you explain to investors that this is real? This, because a lot of people say, "Oh, I made a video once of how I believe by 2032." I showed a video about 8 ways to $8,000 stock price. Now we're looking just at one line of business, and it's $14,000. But at $8,000,
If
they thought I was crazy.
the answer lies in that chart that I shared about how many bots will be made each year and the ramp for iPhones. I'm not sure if you can
Yep.
quickly go
Yep.
back to that, but
I can.
in 2007, Apple produced less than 4 million iPhones.
The
And how many years did it take them to produce more than 200 million?
Yeah.
Well, it was less than 10 years. It was 8 years.
Yep. So this is truly, at least from the what we're looking at here, this is stock price. Let's go back to units and see if that S curve tracks with what you're talking about here. And that's hard to see, but it is basically an S curve. We go from 200,000 units, which is quite conservative in 2029, considering, again, as I mentioned, Giga Shanghai is able to pump out nearly 1.5 million units of a car in just a very short number of years. So that is absolutely feasible, especially considering Elon said they'd be able to ship units next year, and we're assuming they don't start till 2026. So this is pretty incredible. I do want to pick your brain though on one element too, and kick it into the model here, and that is inference, fleet inference. I had a tough
Yeah.
time modeling that. If you believe we've licked the bots so far.
Well, again, I think that's pretty conservative in the sense that with a capable bot, the demand will be off the charts.
Yep.
So Tesla will be able to make or sell as many bots or deploy as many bots as they can possibly make. And I think Apple gives us a pretty good indication that you can ramp up into the many, many, many millions within a decade. I don't think that's going to be a problem.
Amazing. Amazing. And while we're on the subject regarding bots, and the whole magic of the bot is the brain, the car and FSD already has the brain. You agree?
Yes, in the sense of the computer system that's there.
Yep.
Um, yes, it's ultimately the software that gets put onto that is the key. But yes.
Okay. Alrighty. To turn on the inference, we're going to do year zero. They do 1.84 million cars, and fleet is growing at 40%. So that's all very straightforward. Average sales price 40,000, which will go down over time by 5%. FSD, you could argue it's coming here, but the uptake rate is very small. 15%, probably a little bit generous. Price ASP is 2,400. That should go down over time too, or could go up depending on the value. If the robotaxi gets turned on, that could go up. You want to run through these ones right now as we go
Sure.
real
Yeah.
fast?
Sure. Just on FSD, in doing the robotaxi modeling that I've done, there's a relationship between FSD and the take rate, the amount of revenue that Tesla receives from the robotaxi deployment.
Hmm. Okay.
I have argued that eventually, when Tesla's ready, that they should drop the price of FSD lower for the simple reason that it will help save lives.
Hmm.
If if FSD makes driving vehicles as safe as it can possibly be, then you should put it in as many people's hands as possible. So offer FSD as low as possible, and you can make it up by having a slightly higher take rate. And that way, people that are using their vehicles to make money end up paying more. But people that are using their vehicles just to drive
Ah.
around themselves, then they pay less and they benefit from having the safest vehicle on the planet.
So you'd say maybe drop the FSD to $100 a month,
Uh,
1,200 a year.
sure.
Okay.
Yep.
Let's make this 12. And then what's your estimate for take rate? Say starting at 15%, because I think we're currently at about 9% today, if I'm not mistaken.
If the FSD price is lower, then the take rate will be higher.
Yeah.
So at that level, I would assume 50%.
50. Wow. All right. And then growing at 10% per year. And that becomes very quickly, well, that would be 2.5 million cars already. But we have to take into account the global market. But new FSD V12 has the ability to learn roads all over the world by just looking at videos. So theoretically possible. Alrighty. Have you modeled the insurance business?
I have not yet. And
All
that
right.
one is interesting, although I think admittedly it'll be relatively small compared to the other parts.
Yeah, I agree. I think one of the visions that many people have for the future is an all-in lease, which covers supercharging and insurance and all that other good stuff. FSD in one package. They'll probably do that in the near future. So we'll skip that. Fleet AI inference. So here, the question is, when will people be able to turn on their inference? Will it be next year or a couple of years from now?
I assumed that would start in a couple of years.
Okay, so we're going to 2026.
Yeah.
Take rate I have is 10%.
I had that starting at 10 and going up to 50.
Okay. And then the average sales per unit, that is the amount of profit that Tesla gets, the amount of revenue that Tesla can generate from
Yeah.
this inference. And I'm not even talking about how much the customer gets back. That's not important for me. It's how much Tesla can make. I have $500 a year per car.
Yeah, I'm at 256 based on my modeling.
Wow.
Now that
Okay.
sounds very, very precise. It's not very precise, but
All right.
um,
Will that go up over time or stay flat?
I think actually it's likely to go down over time.
Okay. So minus 5% per year.
Yeah.
All right. Excuse my typo. It's not that easy typing and standing. Whoops. I hope that works. And then let me format this carefully, make sure it's good. Multiple for this line of business, AI inference. I have 30, but I think
Yep. I agree.
it's high. Okay, and profit margin 75%. You could even argue it's 100%. Like when you look at your 256, how much does Tesla bring home?
That's a net profit.
Yeah.
So sorry,
Oh, it is net
was your
profits.
500 revenue? Yeah, I'm
Yeah.
sorry. My 256 was the net profit.
Okay, so it's 100% profit margin.
Yep.
Bingo. All right. Robotaxi.
Robotaxi. Let's pull that up.
Again, from the position of how much Tesla brings home net and how much it grows by and when it begins.
So I have it beginning in 2027,
Okay, 3 years from now.
and that's with a fleet of 1 million vehicles.
I've got 1% of the fleet, and the fleet is calculated growing every year. In fact, we can check if you want to look at the fleet size. I've got the fleet growing at 40% per year. So 2027, there will be a fleet of and it's
I have
growing.
a,
Where
I
is
have a
my?
fleet of about 20 million at that point.
Yeah, I have the fleet here somewhere. I just forget where it is. Um, okay, we'll check that
So
after.
I'm about 5% of the fleet instead of 1%.
Okay, well, okay, 5%, and the average revenue that Tesla gets, I have it 5,000 per year per vehicle per robotaxi, which is probably super small. Some people say it should be 60,000.
Yeah, I have a net profit of 10,000,
10,000. Okay, we're kind of close.
and I think that's low actually.
Yeah. See, I beat you there on sandbagging.
You
All
did.
right. And then a PE of 60 on this business. And the profit, when you say 10,000, that's net profit again, like before, correct?
Yes,
All
that's
right.
correct.
So that'd be 100%.
And I have a
Uh,
PE of 40.
40. I got 60. Okay. Good. Now there's a thing called fleet media entertainment apps, the whole app store model. Again, it could be, it's typically, it's $10 a month per car right now for this. So it's 120 a year. I imagine, well, it's already here, so that already started. The take rate, I'm not sure how many people pay the $10 a month for media and stuff. Do
So
you?
does this also include media as part of Robotaxi? If people are taking rides
No,
and
no.
enjoying, no.
That would be like a. It could, yes. Actually, when Herbert and I did it down the line, it was yes. But initially, now because it doesn't exist, it doesn't. So therefore, we start at $10 a month, but we grew over time, as well as adoption. Now that I recall,
Hmm.
so
So there's a whole host of things that could be included in here,
yeah,
particularly as associated with a robotaxi network. There's entertainment in the car. There's advertising in the car. There's also other services that you could layer on top of this. So, for example, if you were in a new city and you wanted a tour, there might be some kind of curated experience that could be delivered via the robotaxi network that you'd pay for.
mm.
Or if you wanted to, the car to help you figure out where to go to a restaurant, the car could find out, where there's a table available and call ahead and make an appointment for you.
And then get a cut of that business from the open table or
Exactly.
whatever. Yeah. Okay.
Yeah. Sorry, I wouldn't call ahead. I'm using an old term.
All
Um,
right.
but yeah, so there's lots of different opportunities there in terms of new services. And I think we've already seen that with other things that go digital. You can layer other services on top of them.
So how much per year per car?
Uh,
And
per year per,
I have it starting at 120 today, but I
yeah.
only assume 40% of cars pay for this right now. But it could explode, or what we could do is bundle that into the profit that the robotaxi itself makes standalone and keep them separate, because there will be, the AI capability and the LTE and the streaming that all comes with the car that people will pay more and more from as it gets more mature. Who knows, maybe there'll be Starlink available in the cars in a couple of years, and that could be 30, 40,
Yeah,
$50 a month.
I think there will be a whole host of other services that we can barely dream of today that'll be a part of that.
Okay. So, well, should we just leave it at 120 starting now, and
Sure.
then the growth rate is high for this? PE on it I have is 30.
Sounds good.
Okay. And 80% profit margin, which you'd probably have 100% there for that, but we'll leave it at 80 because there might be some work. Okay, semi and van. I did some modeling on the semi truck. I was very impressed with what could be done, especially with, if you could turn these things into, what's it called when 8 or 10 drive at the same time, say from San Francisco to LA.
Platoon.
Yeah, exactly. Um, you could just need one driver and have the other 9 follow, technically. So,
Hmm.
do you believe in the semi at all?
Yes, I haven't done any deep work on modeling the semi yet, but I do believe that this is a game changer in the trucking industry.
Yeah.
Again, we're in early days with this, but the vehicle can be utilized very highly, and the operational costs are so much lower.
Yeah, and you probably remember that event that they had where they had two vehicles. One looked like a van; it was covered in a sheet. I think
Hmm.
that's a van. And I think once they do I think they're opening up expanding the semi factory in Nevada for making trucks alone. I think they might be making the van there as well. So I have the start out as just 200 units. They're a quarter of a million a pop, 240,000 a pop, but they will be growing by a small amount per year as they ramp. The problem I'm concerned with is with the semi trucks is they require so many batteries. 10x or 8x the amount of batteries that a Model Y would have. So that becomes a bit of a limiting factor. Perhaps, I'm not sure.
I
But
think in the short term it is, but longer term, I don't think that battery production will be too much of a problem.
okay, so we'll just leave that as is. Megapack Auto Bidder. This is what I want to pick your brain on too. So
Hmm.
I've got 10,000 units here now. Growth rate 80% per year. The average sales price. So I just bundled in the auto bidder with the mega pack, but I probably should make that standalone. We can create a separate category altogether for this if you want.
Yeah, that's what I did. I've modeled AutoBidder separately
Okay.
from Tesla's energy business.
All right. How many units per year?
Well, yeah. So for the storage business, I have. Sorry, what year are we starting?
It
2024.
already exists, so they use it in Australia and other places, from what I understand.
Yes. Yeah. So they did about 15 gigawatt hours last year. Let's say this year it's let's just say it's 40.
40. So I'm going to call it just 40 units. Um, then we go annual growth rate, 50% easy.
Hmm.
Annual growth rate adjustment, we'll say of it reducing 5% per year over time. Annual sales price per unit.
Since we've got 40, so I've got yeah, I don't have this. Sorry, on this page I'm looking at because this is just modeling the AutoBidder revenue. So we're doing Tesla Energy, or this is AutoBidder.
This is
Okay,
just
this is
auto
AutoBidder.
bidder. Yeah.
So I have a net profit um, of $7,400
Okay.
on. Sorry, let me just check this.
So I can make this 100%.
And I guess that's per megawatt hour.
Yep. Oh,
So
you gave me
you should use as
40.
units. Yeah, you should use as units 40,000 then instead of
Got
40.
it.
I think that'll get us.
Alrighty. Okay, that's in there. And we can actually go and have a look. It's going to get really scary all of a sudden. So we don't really need units anymore. We can just go straight to revenue. And this becomes a bit of an eye chart when you look at everything together. So we've got to work on that. But let's go. Why don't we just go to the export table and we can see the numbers. So we don't have insurance. We do have FSD. We got the 2034. What year would you like to focus on? 2030?
Sure, that's a good year.
So,
Yep.
so on auto bidder, I then have 4.8 billion in revenue. You may have
That
a lot more.
sounds low because I'm getting a value of about 350 billion in AutoBidder using a PE of 30.
Okay, let me have to. What's your growth rate on that business?
Well, it starts out at about 100% and then goes down to about 25.
Okay, so the throttle factor we'll use is 10% then. Okay, now we check the numbers. So now 2030 auto bidder is 24.6 billion. Is that closer to where you are?
That's in the ballpark.
Okay. Which equates to Optimus bots in 2030. And this goes back to the whole thesis that, hey, Nobody's looking at the energy business. And Elon said many, many times over the years that the energy business will be bigger than the car business. And in fact, when you look at the utility business around the world, it's 100x the size of the automobile business. So these numbers are not beyond reality. Let's toggle this to stock price and see where we are right now. So when we aggregate all of this together, wow, so we're super high. It's easier almost to read the chart. So stock price, then we look here. We've got all the components of, oh, that's something's wrong here. Stock price. If you add this together, it's only $2,400. This is why this thing is a little bit temperamental. Profit margin goes to, wow, 176 billion margin profit. So the easy way you could calculate that is, let me delete this. Yeah, these numbers get mind-blowing real fast. But now look at this. Yeah, the profit margins are just insane by line of business. So what we'll probably have to do is just farm this all out. But are we missing anything from the master model? Solar heat pump is something that I don't have. I wouldn't even know where to begin. But I just assume 2,000 units is $7,500 based on traditional heat pump pricing. Dojo, you haven't looked at, or have you?
No, not yet. I haven't done any modeling of Dojo. I think that
Yeah,
is an interesting opportunity at some point.
yeah. And then
Um,
supercharger business. Have you looked at that?
I have.
Oh, okay. Oh, I know what's wrong. Yeah, well, haven't started these mega pack, semi van. This is what we missed. This is going to start already this year. Robotaxi year 3. Insurance doesn't matter. Let's talk superchargers and the hardware for the superchargers, especially given a lot of the BP deal and others. Let's
Yeah,
talk.
so my model was done before that deal. I did not factor in Tesla, selling that to anybody. I was just looking at them operating a charging network, and I have in 2030 about 400,000 supercharger connectors.
Okay, so right now we have 55,000 on the nose, from what I understand. Do you calculate the sales per connector?
I've got just in the model I have on my screen. I've got a profit per connector per year of about $7,000.
Okay. All right, this is good. 100% profit. So put that in. A multiplier on this business,
30.
30. Good. Same as me. And it'll increase. So this will get really bonkers. Let's just check this. Let's go out to 2030 and see where we are for this line. Profit margin will be 7.68 billion, and that would add $66.81 to the stock price. Does that ring a bell with you?
The supercharger network for me, I get to a $100 billion value by 2030.
Wow.
So it's not insignificant, but it pales in comparison to the opportunity with robotaxi and the bots.
Yeah. Well, let's check the export tab. We'll look at, well, stock price and year 2024, year 6, superchargers, again, $67. So why are we not getting to where you want to be with that? Superchargers hardware, 55,000 today. Growth rate, oh, I know why. Growth rate isn't high enough. What do you have as a growth rate for connectors? You're getting to 400,000 by 2030.
Yes. Mine is tied to the number of automobiles sold. And of course, now it's not just tied to that, it's the whole industry. So that actually should be probably higher than what I originally modeled. But I'm getting to, in 2030, cumulative EVs of 47 million, and about 400 to 500,000 connectors. And I'm kind of backing into it by using a fixed ratio of for every 100 vehicles, you need one supercharger connector.
Okay, I've got 1.1 million superchargers, which is higher than yours, but I'm not getting the right number. 55,000. 70% growth rate's too high. 7,000 is the profit per unit, so I have it at 100% profit margin. That's weird. I need to make this about 60%. Anyway, I'll come back and look. But either way, it is substantial. All right, so let's look at stock price then in total for all of this. I still think it's as if the bot does not add a lot of value until later. It ramps real fast. So the question I have, like Robotaxi here, per the modeling we have done, by 2034 is a $20,000 stock price alone. The bot's only 14,000. I would have thought.
In my 2034 numbers, I have the bots at about a 34 trillion market value, and Robotaxi at 22 trillion, which again sounds nutty to say those numbers out loud. I have them sort of ramping, at the same time, although admittedly maybe Robotaxi ramps a little faster, which may or may not be accurate. But the bots become more valuable than Robotaxi by 2033.
Okay. So this is the bottom line attribution right now, the net profit for these assets, and somehow the Robotaxi is at 1.8 trillion and the bot's only 516 billion. Let's go back to the Robotaxi. Figure out what happened here. 10,000 per Robotaxi, 5% of the fleet, growing at 150%, throttled at 40%. And the multiple may be too high. Either way, I think, as you say, what's a few billion between friends, the numbers are crazy. So this thing in 2034 will make over 3 trillion in profit. Does that sound beyond the realm of possible? Across all lines that we've modeled.
It doesn't. If the market value in my modeling is a combined, 60 trillion, if the PE on average is 30, then you're at about a $2 trillion profit.
Okay, so just taking a PE of this 3 trillion in profit, if we take a PE of 60 and divide it by, say, 4 billion shares, that's 3.3 billion growing to 4 billion shares. That's a share price of $46,795 in 2034, which again is mind-blowing.
Yeah, there's a lot of execution that has to happen. There's a lot of development that has to happen. There's a lot of things that can throw a curveball. But directionally, I think the important thing is that Robotaxi and Humanoid Bots those are two massive opportunities that don't yet exist today. That if they do materialize in any way, however we want to model it, the numbers are in the trillions.
Yeah.
Right. And so, there's no precision here. We're just looking at, things growing over time. Exactly. I've tried to be pretty conservative in my numbers. And even if I assign a probability, which I think is the right way to look at it, is to build your model and then at the end assign a probability of different scenarios. And you can add those scenarios up and come up with a sort of probability weighted price.
Yeah.
So in my model, if I assign a 60% probability to bots and Robotaxi and supercharging, and 25%, I'm sorry, 60% to my auto number my energy number and supercharging, and 25% probability to my bot and my robotaxi numbers, I still get to a $21 trillion valuation.
Oh, I don't even have Megapack in here. Hold on a second. Megapack is going to go to 20,000 units this year, and they're 2.1 million a pop. That's what was missing. That's what was missing in this.
As if we needed more.
Yeah, exactly. I was like, and that's still kind of conservative. 80% minus 20% throttling. This, so just adding Megapack, super conservative with where they're going to go. Then we see the three main lines of business are Robotaxi, Megapack, Bot, and Autobidder. And in fact, if you bundle Megapack and Autobidder together, it's a three-legged stool between those three things. Final,
And if
yeah,
and if you think about it, just real quick, if you think about it, those are all three are AI businesses.
yep.
Megapack itself isn't, but it becomes the vehicle to which Autobidder is attached to, and that's AI powered software. So again, the thesis is this company is becoming an AI powered robot company. The Megapack is stationary. It's a robot that's stationary. The other two robots are on wheels and on feet. That's where this company is headed. And Wall Street today refuses to consider that possibility in any material way.
And the crazy, there's two last questions I have for you, and thank you so much again, Cern, for your time. This has been incredible, and it looks like we're going to have to revisit this again. What I'm going to do is I'll get the model to you, and you can tweak it, and then we'll probably come back again and do some fine tuning. And there might be some new lines of business by that time as well. But there's two things. One, for those investors that are impatient right now, what would you advise them, those that want to make 40% return by the end of the year? And I recall, like, I watch every investor call, I listen to everything, certain things sit in my head. And I remember Elon and the CFO at the time said, margins are going to blow up in 2024. Now you'd swear the world is ending in 2024 for Tesla, especially when they came out last, said zero growth, etc. Do you think they have a trick up their sleeve, or are they just sandbagging, or letting retail investors buy cheaper? I couldn't figure that one out. How the tune changed from 2 quarters, from we're going to have infinite margins in 2024. It's going to be a massive growth year to no growth. What happened there?
Yeah, that's a good question. I don't know that I've got a good answer for that. But my perspective is that, I want the management of the company solely focused on the execution on the business.
Yep.
I don't really need them to be too worried about communicating with Wall Street. I wish actually they would stop spoon feeding Wall Street with estimates, which it looks like they're doing. They're stopping doing that. They haven't given solid guidance on what to expect for this year. Now, maybe that will come after the first quarter. I guess we'll have to see. But I would like Wall Street to start doing their own research and not rely on the company to spoon feed them. In terms of margins, there's some upside potential for margins, particularly if the economy begins to recover at some point. That should be helpful for margins. Tesla has been very aggressive with pricing
Yep.
to the benefit of consumers. And margins should also benefit as they get their cost of goods, they're continuously driving down the cost of goods, and the benefits of scale also. If they can get Berlin and Texas gigafactories, producing more, then they'll have massive economies of scale from that as well.
And the wild card as well. One of the things I think about is not just how they are absolutely reducing the cost of a world-class vehicle far lower than the competition when you look at features and functionalities, but could they get to a time, I know they don't want to be in a position to gouge customers, but if you make a car so affordable, like your equivalent of a $35,000 Toyota is now sold for $25,000, would that put more money in people's pockets so they could afford to pay for FSD, thereby dropping direct profit attribution to the bottom line of Tesla? So they'll actually gain more margin and more profit by selling extras to the car by making the car so affordable.
Yes, absolutely. That definitely would be a factor for many people. It would also just, even for those people that didn't buy FSD, it would expand their market because now you're dropping down to a price point in which those folks can afford to buy the vehicle.
Yeah,
So yes, but
yeah,
certainly some of them would choose to purchase FSD as well.
yeah. Arc has that great chart. For every percentile you drop price, the
Hmm.
explosive nature of how you open up the market is unreal. Final question for you, sir. And again, everybody, please follow Cern below. He is brilliant, and I'm so grateful for the time he has spent with us. When does and I asked this before, but I'm going to ask it again. This model that people are looking at here, and what I'll do is I'm going to turn this into a Substack after. I'm going to take all the learnings from you, sir, and I'm going to turn it into a kind of a written paper and make these graphics a little more clear as well. When does Wall Street wake up and say, okay, in 20, because what we're looking at here, and the point I always make, when we model stuff, we model at a valuation at a point in time when the profit hits the bottom line. But the way markets are supposed to work is they're supposed to look forward. Unfortunately, they don't do that with Tesla. If you were to look at this, so imagine you're a Wall Street analyst, it's the year 2027, and you're looking forward to the year 2030. Stock is trading at $816 because that's what the profit dictates with a very conservative multiple. When do they look forward to that $816 becoming $3,500? 2 years ahead, 3 years ahead, 1 month ahead? Any
Well,
idea?
let me just say this as it relates, and this is kind of an indirect way of answering your question. As it relates to humanoid robots, which Wall Street right now does not factor in or consider at all. Maybe they mention it in one sentence in a report. That's it. Using Chris's model, where he modeled 1.5 million by 2030, if I put 200,000 bots into his model, you get a Optimus valuation of 1.3 trillion. So Tesla does not have to sell or deploy many bots for Wall Street suddenly to have some numbers with which to build a model around. And if
Yep.
that's what they're waiting for, then those numbers could come in the next couple of years in terms of early indications about, what does the business model look like for humanoid bots?
Yep.
And if it's anything like Chris or I modeled, it doesn't take many bots to wake up Wall Street and realize the potential. And then when they start calculating the total addressable market, that's when things potentially explode because 200,000 is a drop in the bucket compared to the potential market that bots could serve.
Exactly. And after this extensive modeling we've just done, everybody, these bots get $25 billion in basic almost profit, uh, revenue, which is extremely high margin business in 2030. But if Tesla can start showing revenue and margin for these things in 2025, 2026, it won't take Wall Street long before they whip out their abacus and say, okay, forecast this growth rate 3 years forward, and saying, this is a $25 billion high margin business at a multiple of 100. That's a $3,500 stock price. The question is, when does that happen? Did I summarize that in a logical way with the abacus and everything?
Yes. And
Yeah,
again, I would just like to emphasize that nothing that I've said today is financial advice,
of
but
course, of course.
directionally, when we look at Tesla and the bot industry in general, even if one company, let's say Figure beats Tesla to the market and starts delivering bots, and we start to see what their business model looks like, then that now is a data point that Wall Street can include for Tesla and make some projections.
Yeah,
So they just want to hang their head on something that's real, that's a real business, even if it's tiny, even if it's small, anything that they can hang their head on to say, here's the revenue from 10,000 bots. That's the start of a model that they can use then to project forward.
Insane. Well, that was nearly a 2 hour marathon. You have enlightened the world once again, Cern. I'm very, very grateful for you and the time you're spending just to help people understand what this opportunity is. And it's just a waiting game at this stage before the penny drops, I think. And I hope people get a little more confidence. And I see, when I see things like, I had a limit order in today for about $180 and change. Missed it by $2. But that happens. But this is kind of, I think, a very good opportunity, especially when you model out at a point in time, not many years from now. This will be worth many, many times. It's going to be hard to wrap your head around what this company is. Again, provided they execute. But even if they fail in a couple of lines of business, they're still a huge business on just the Megapack auto bidder alone. And
That's
that's
right.
already here today, which is stunning. So thank you so much
The,
again.
the,
Oh, sorry.
the way that I would just characterize it is that you're essentially getting some free call options, I think, on autonomy and bots. And
It's
you've probably heard of this term. It's an asymmetric bet, right? And so the upside is so staggering. The potential upside is so staggering that when you have an opportunity to buy into a company or an industry that has that kind of upside, that gets very interesting for investors. You may have to wait a few years for that to materialize, but that's the nature of it in terms of an asymmetric bet.
yeah,
Um, the call option might expire worthless. The humanoid bots may not become a thing, but to your point, even if they don't, there's lots of other revenue growth opportunities within Tesla and these other companies.
exactly. But we know that they will because I actually have a bot parked outside the office here that drives itself. Took me home last night as well. So
Right.
we are here. Just the opportunity is the world doesn't realize yet, which is great. Final question, and I do this all the time myself, and my goal is to try and help people make a path to the future, kind of like what you do as well. And I have this
Mm-hmm.
thing called Retire On series. How many shares do you need of something, or how many Bitcoin, or whatever do you need to build a conservative portfolio that's diversified to be able to retire in certain countries around the world at certain times based on your needs and goals and expenses. How many shares do you think each member of the audience, if they have, say, an 8 to 10 year time frame, how many shares should they sock away of Tesla right now? What do you think would be life changing to them? And I'm sure you've done the math because I do it every day in my head.
Well, what's life changing to different people is different things. And again, I would say that again, this is not investment advice, but generally you should buy as much as your comfort level allows you to deal with the swings and the daily news, the daily FUD, all the negativity that comes at you. This stock will bounce around like a roller coaster. And it's been true of Apple, it's been true of Amazon, Nvidia, Meta, you name the company, Google, Microsoft. Microsoft, after the dot com bust, went down and didn't hit a new high for 14 years. 14 years, right? And Amazon lost at one point 97% of its value. So the ride in these companies that are changing the world is extreme. And so you just have to make sure that you can handle the ride. If you jump off the roller coaster at the wrong time, then none of this is going to do you any good. So whatever the amount of shares is, you just need to make sure it's a gut check to say, okay, when I open look at my account statement 6 months from now and I've lost 50%, am I going to be okay with that? That's the number one thing. Other than that, acquire as many as you're comfortable with, but just make sure you can handle the downside because it's inevitable. The roller coaster will take you on a ride. As great as the upside may be, the one thing we can guarantee is some pain along the way.
Exactly. And per the modeling we've done, just as imagine a simple round number, this takes us 10 years from now to $48,922 share price. 20 of those shares is $1 million. And 20 shares today is not a lot of money compared to, well, it is a lot of money, but it's still, compared to the upside, it's magnificent. So it's very good for people to I think the number one step in investing is have a plan and then execute the plan. Kind of like what Tesla have to do. They got to execute the plan. They got all the bits and bobs, and they need to string it all
Yeah.
together and pull it off and scale. So this has been absolutely
Yeah.
fantastic. Definitely my favorite
James.
interview ever. Thank you so much, Cern.
Thank
Anything
you,
you
James.
need, I'm here for you. And the audience is very grateful. We've had 2,000 people pretty much watching live now for 2 hours, which is staggering. So expect a lot of views in this one. Thank you, everybody. I hope you got some value out of it. Hit the like below, follow Cern, and we'll see you all soon. Thank you, everybody. Thank you once again, Cern, for being here. Have a great
My
evening.
pleasure. Thanks, everyone.
Bye bye.
Thank you.